Okay, guys, welcome back to episode 2. So, in this episode, I'm going to cover how to actually plot down those key institutional psychological levels. So, 1.4 would be the high. You don't want to go all the way back into, say, for example, 1.6, all the way down to 0.8. You're just sticking with the most recent high and low on this time frame. So, that would just be 1.4, and the most recent low comes in at around 1.05, as you can see. From there, all you're going to do now is just clone it down to say 1.35. So this for me, I found the quickest way. Then I don't know what computer you're using, but for example, I've got a Mac. I just hold down Command and just tap it twice, and then I can move down 2 lines rather than having to do 1 line at a time. I think there's no limit on the amount of lines you can obviously click. So then now, for example, to show you, I've got 1, 2, 3, 4. Then I can just drag them down, and that's now 1.2. Then I just make sure each line is actually the round key number, because these will make a difference, which I'm going to show you after I just do this. So I know you see the zone around my levels. So the reason for this zone is price for me tends to, if it is going to stop hunt or do any sort of manipulation, which is something we'll cover later on, I do notice it does tend to do it, say, 10 pips. So what I do with the charts is that's 10 pips lower and 10 pips higher. So that's a 20 pip range around. You put it to 999, and on this side you put minus 999. So all that means is it covers the whole chart. So as time moves on, you won't have to continue to move it across. And then the exact same thing again, you just continue to drag, hold that level. So obviously 10 pips, 10 pips, and you can do the exact same thing again. Hold, tap down on each blue line, do it again. 1301, 129, 21. So like I said, this is the only bit that's really tedious. It does take up a little bit of time if you are going to do it for every chart, but on the upside, once you do it once, you haven't got to do it again. So when we drag all 3 down now, so you can see, so you want 201, 199, that range is done, 151, 149, 101, 109. So you can see you don't really have to alter that because it's copying the previous distance to the left and to the right anyway. And then very simple, so you've got all your key levels now, so you're seeing the way price is starting to take shape, it's starting to take structure. And then again, just get your horizontal line in, and now put in your mid-range, which is going to be every 250 pips now. So same thing again, tap them both, 175, 225, and we need 1, 2, 3 more. So 1, 2, 3, drag, 1, 2, 7, 5, 1, 3, 2, 5, 1, 3, 7, 5. So now you've completed to put all your key lines in. In case obviously price does break, here we've got 1.025, which would be the next downside target. So now you've got all your key levels plotted. Won't have to do that again. It's on every time frame now. And then you can start to see just how accurate these ranges are. So you can see how much they come into play. Like I said, these levels in price are not random. As you can see, as far as we go back, even before, you can see all the levels have held some validity no matter how far you're going to go back in the price structure, in the price time. You can see 1.25 was the low before, 1.2. So you can see all along, going back even predating into 2000s, into 2003s, you can see how well these levels play out and how accurate they are when you're in a trending market. So that roughly took me, say, 5 minutes. And as you go down in time frames, you can now see what I mean about why I make the price that range. So just 10 pips higher, 10 pips lower. And that's because now, when we have a look at that range here of the price, at 20 pips, you can see price may go beyond the 1.10, but it won't close. It's just for me, when you have a range, it's just a little bit less specific. You can see the way price will come back in and around that area. You'll play in and around those key levels. But when it's a quarterly figure, I like to be a bit more specific, only because it's not a key major figure, it's a quarterly figure, so price has got more chance of breaking through it. But when it's a obviously round number, a 500 pip target, then you can see you're more likely to have wicks rather than actual candles go straight through it. So that's just a quick tutorial on how to plot your key levels. It's the exact same for every pair. Only difference will be on exotic pairs or different currencies in terms of the actual rate, what is 10 pips, 100 pips, for example. But same method applies to all of them. And once you plotted your key levels, you can now begin to stay on the monthly chart and begin your top-down analysis, which we're going to go into in the next volume. Thanks for watching, guys.